Well, welcome back to U.S. Farm Report this weekend here from World Dairy Expo. Okay, as we looked at feed prices earlier, but when you look at feed availability, dairy producers, livestock producers in the West have had severe trouble getting some of that grain. We didn't have a strike, but we're not in the clear. Is there still a chance that we see a rail strike, and what impact could that have on basis that we're seeing deteriorate in some of these areas of the Midwest?
Well, even if we don't have a rail strike, the rail is so congested and so problematic today, it's not going to make a much difference. Rail prices are rising. If you look at the barge market heading to the Mississippi, it's slowed. Today it costs 1.5 times to get beans to the Gulf as it would to load it and get it to China. It's crazy what's going on. So transportation logistics is a nightmare. If you're in Kansas or the Western Plains, you're paying $2 over plus for corn if you can find it. It's a problem. It's going to cost dairies there going forward. To Scott's point, alfalfa prices are at record highs and not to improve. It's really from, if you take the Mississippi going westward, it's going to be a struggle for farmers that are dairying in that part of the world.
Well, Scott, you're in a state that has its fair share of drought right now. Things, we haven't seen a lot of rain. Pastures and things are really showing signs of this drought. So for those areas where feed shortages are potentially a concern, do you think we see some of this livestock production, specifically dairy production, move farther east?
Well, I think now we have to start thinking about those things beginning to happen. I think we're seeing some of that already starting to unfold, but if all of a sudden it's not whether I can get feed or what I have to pay for it, it's that availability. If I don't have it available, it's not going to work to operate a dairy in some of those states. So I do think we'll see some of this shift more east as we go through time. Again, I will remind us, however, a good crop in the bin in South America and here in the U.S. next year could change things. The logistics may still be difficult to get that grain to go west, but better crops might make what's a very tight S&U become a little less tight and lower prices.
Mike, you have quite a few producers that you work with in California. I mean, you were one of the first ones that raised the red flag about the feed availability issue and getting it via rail out there. So as you're having some of those conversations, what type of difficult decisions are we seeing being made, and could it ultimately impact the milk production picture here in the U.S.?
Oh, for sure, and it already has, to be fair.
Right.
I mean, the milk production picture has seen a shift eastward already, and this is not a new trend. We're seeing a lot of growth in that, central corridor from northern Texas up into South Dakota as a response to all that's been going on in the West with regard to dryness and availability of feed and environmental pressures, water. All of that stuff has been going on for years. We're just seeing a heavier dose of it today. So as we go forward, we don't expect that to stop anytime quick. And there's new processing capacity opening up in that corridor to invite even more people to keep coming into that space and leaving further western regions. So I don't look for that to shift at all time. That's going to continue.
Well, Dan, when you also talking about costs, a decision this week out of OPEC to cut oil supplies. So we're seeing costs of feed up, and we got a little relief on the oil side. Well, now it seems like we're going to see that move higher. When you look at the cost side, what do you think is going to be the biggest pain point for producers in this room?
Oh, it's energy and grain. I mean, it's too. You've got a bull market in energy. We think we're going back above $100 crude as we head in the winter. Gas prices are rising. It's not going to relent. We need people to be forward thinking about availability of supply in the United States. We're relying on foreigners. The whole gambit is bullish of energy, and I don't see how it's going to change. In Europe, for a dairy farmer, the natural gas price is the equivalent to $400 crude oil. So that kind of puts it in perspective when we're trading around $88 here this morning.
We don't like to talk about recession, but you are an economist that's on the panel. So at this point, would you say that the U.S. is in a recession? Or technically, how do you quantify that?
Yeah, so I think certainly we are seeing much slower growth. I think that is one of my biggest concerns from a risk standpoint. And it's not just what have we already done in terms of low to negative growth, it's what's happening going forward.
All right, well, I appreciate you all being here on our panel this weekend. Thank you so much. Well, we need to take a quick break, and then we have just the most amazing dairy-related Grit with Grace story this weekend on the show, so stay tuned. You'll want to see that next.